Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets buried deep within corporate filings, because sometimes the most important news isn't on the front page. Today we're diving into a filing from Actuate Therapeutics Incorporated. Now, Actuate Therapeutics sounds like a company on a mission to help people. And their latest report is all about how they plan to fund that mission, and spoiler alert, it involves selling more of their stock. Let's break down what this filing really means. Before we dive in, if you appreciate getting straight financial insights without all the corporate jargon, make sure you are subscribed. And if you want to chat more about these filings and get early access to our analyses, join our Discord community. The link is in the description below. So, what is the big news here? Actuate Therapeutics, or as we'll call them, Actuate for short, has entered into what is called an at-the-market issuance sales agreement. Sounds fancy, right? What it really means is they've inked a deal to sell up to $100 million worth of their company stock. Think of it like this: they've got a shareholder who is willing to go out and find buyers for their stock, and Actuate can do this whenever they feel it is the right time. This agreement is with two financial firms, B. Riley Securities Incorporated and Craig Hallam Capital Group Incorporated. They're essentially acting as Actuate's sales agents. Actuate can decide to sell their stock at market prices, meaning whatever the stock is trading for on the market at that moment. They can do this whenever they want, and the sales agents will do their best to sell it for them. This is a pretty common way for companies, especially those in the biotech or pharmaceutical space like Actuate, to raise money for ongoing research, development, or to fund clinical trials, which are notoriously expensive. The filing specifies they can sell shares of their common stock. This is basically ownership in the company. When you buy common stock, you own a tiny piece of Actuate Therapeutics Incorporated. The face value of these shares is incredibly small, just a fraction of a penny. This is typical for companies that have a lot of shares outstanding. The real value comes from what the market believes the company is worth. And where does this stock trade? It is listed on the Nasdaq Stock Market LLC. This is a major stock exchange known for listing a lot of technology and growth companies. Being on Nasdaq means Actuate is accessible to a broad range of investors. Now, something interesting here. Actuate has checked the box to be considered an emerging growth company. This designation means they have less than a certain amount of annual gross revenue and are under a certain size, as defined by the government. Companies with this status often get some regulatory perks, like being able to delay adopting new accounting rules. It signals that Actuate is still in a growth phase, likely focused on developing its products rather than generating massive profits, which is typical for many biotech firms. To do this stock sale, Actuate has an effective registration statement on Form S-3. This is a filing with the US Securities and Exchange Commission, or SEC, that basically says, hey, we're planning to sell stock and here is the important information people need to know. It was initially filed back in September of 2025. And a prospectus supplement, which gives the specifics of this particular offering, was filed on the 28th of November 2025. This means they've gone through the necessary steps to be able to sell this stock legally. So, how much does this cost Actuate? The sales agents will get paid a commission, and it can be as much as 3.0% of whatever money they bring in from selling the stock. So, if they sell all $100 million worth of stock, the agents could get up to $3 million. They also get standard legal protections like indemnification, which is basically protection against lawsuits if something goes wrong. It's a standard cost of doing business when you need to raise capital this way. Finally, there is a mention of a legal opinion and consent from a law firm called Greenberg Traurig, LLP. This is essentially a legal stamp of approval, confirming that the shares being offered are legally sound and properly registered. It is another piece of the puzzle that ensures everything is above board. This legal opinion from Greenberg Traurig, LLP is filed as Exhibit 5.1. It covers their assessment of the legality of the shares being offered. It is important for investor confidence. And as part of that, Exhibit 23.1 is the consent from Greenberg Traurig, LLP. This consent allows their legal opinion to be included in this filing, showing they agree with its inclusion and their work is being represented accurately. And for the tech-savvy viewers out there, Exhibit 104 is the cover page interactive data file. This is an electronic, machine-readable version of the filing's cover page information designed to make it easier for computers to process and analyze the data. It is part of the SEC's push for more digital reporting, and signing off on this report is Daniel M. Schmidt, the Chief Executive Officer of Actuate Therapeutics Incorporated. His signature signifies that the company stands behind the information presented in this filing. So, what does all this boil down to? This filing is essentially Actuate Therapeutics telling the world they've secured a pathway to raise a significant amount of capital, up to $100 million. They are clearly focused on growth and research, likely needing these funds to push their therapeutic candidates through development. As an emerging growth company, they're in that crucial phase where substantial investment is needed to potentially bring life. Changing treatments to market, the key for investors will be to watch how effectively this capital is deployed and what progress Actuate makes in its research and development pipeline. This is not a report about current profits or losses, but a strategic move to secure funding for future potential. Now, looking at this filing more broadly, Actuate appears to be in a proactive stance, positioning itself to secure the necessary funds for its ambitious development plans. The decision to use an at-the-market issuance agreement suggests flexibility and a desire to tap into market conditions as they arise. The risks, of course, are inherent in the biotech industry itself. Drug development is a long, expensive, and often unsuccessful road. However, by setting up this funding mechanism, Actuate is reducing one major hurdle: access to capital. The opportunity lies in the success of their therapeutic pipeline. If they manage to bring a successful drug to market, this $100 million could be a crucial down payment on significant future returns for the company and its investors. Alright, that is our breakdown of Actuate Therapeutics Incorporated's latest filing. What is your take on this funding strategy and what it signals for the company's future? Are they on the right track to developing groundbreaking therapies? Drop your thoughts in the comments below. If this analysis was valuable and helped you understand what is really going on, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description for more discussions. Thanks for watching, and we'll see you next time.